From Washington, this is the Macrocast, a podcast brought to you by Penta and Markets Policy Partners.
Good morning. You're listening to the Macrocast. I'm Stratton Kirton, partner at Penta, joined as always by John Fagan and Brendan Walsh. For our last Macrocast of 2022, we're looking back at some of the biggest stories and events that impacted markets, politics, and consumers this year. Let's jump right in. Gentlemen, I was thinking about some of the wrap-up shows that you have done in the last couple of years, and I think 2020 was the one deemed the year that felt like a decade, and 2022 felt pretty long, but I guess we didn't have any new pandemics. We didn't have anybody attempt to overthrow the government, so maybe not that bad for 2022. What are the things you guys are thinking about for this year?
Now that is these are particularly high bars to better previous years. It is I guess the secret to being happy they found over and over again is low expectations, and but I don't know, even with the kind of we're all bracing for bad news at all times these days, and the truth is, we got a lot of it this year, and I think one of the if from a macro perspective, looking back, there are major characteristics that you can point to this year, and most of them are very challenging circumstances. One in particular being the inflation picture.
Mm-hmm.
I just saw, so it was amazing. 300 days ago, the three of us did a podcast, and it was the day that Russia was invading Ukraine. The kind of conclusion was that Odessa was Kiev was going to fall in 3 days, and it was 300 days ago. So that's an amazing story. I mean, it's a terrible story, but it's amazing what the Ukrainian forces have been able to sustain.
All right, so two big ones to start off on. I think most people would agree. Biggest topic of the year: inflation. What have we learned this year? Have we learned anything?
Well, the death of transitory as in part of the lexicon of the Fed was really at the end of last year, at the end of 2021. The Fed was undergoing a rapid conversion from team transitory, and we really saw that play out very significantly this year. It was expressed in rate hike after rate hike. We had four successive rate hikes of 75 basis points. It's a historically steep, and then this last one, a real downshift, was just a 50, which is still historically steep. This is as quick as the Fed, I think, has ever raised interest rates. It's a real shock to the system. They've accompanied that with a thunderous, barrage of hawkish rhetoric, and determined to get inflation down. And what we've seen in financial markets is a lot of the commentary early on in the year was about the Fed credibility, and financial markets certainly took the Fed very much at their word. You didn't see really any signals in financial markets that the Fed, that investors expected the Fed to lose this fight with inflation. You saw, through the spring, market-based gauges of inflation expectations, the TIPS break-evens coming in pretty significantly from their springtime highs. You saw risk assets deflating, very rapidly. You saw commodities peaking out pretty quickly, the dollar running rampant, and the yield curve inverting. And so the message from financial markets was the Fed's going to win the fight with inflation, but it's going to do that at a cost of damaging economic growth. Essentially was the message from the markets.
So I'm curious, you started to touch on this, but where are we actually seeing that play out so far? As a lot of people have pointed out, jobs reports still looking not only good, but pretty robust historic unemployment numbers. And so do you think we're in soft landing territory, which is the new transitory, or are we heading towards hard landing? What are we going to see?
Yeah, our outlook is really that we've sort of analogized this as this period right now is kind of the eye of the storm. The markets were really buffeted by inflationary, concerns about inflation and the Fed's reaction function there too, and that was kind of the head wall of the storm that battered us in 2022. Now we've got a little bit of an eye of the storm here passing over us. Growth has not, as you say, it's not definitive that we're in a recession or tipping into a recession. There's still certainly the possibility of a soft landing, underpinned by resilience in the labor markets and so forth. Corporate corporate earnings staying, not great, but okay. And no systemic risks, no systemic shocks, and maybe we get out of this with no recession or a shallow and brief recession. I think that's actually the consensus among economists. But we're concerned that we really see the impact of growth on a lagged basis, the impact of the strong dollar on a lagged basis. We think that comes in as that second as the eye passes over us. The winds come from a different direction, and it really is that growth slowdown, the lagged effects of this tightening that come through in the real economy. And so we're concerned that the risks are skewed to a more severe recession than we're used to seeing, and exacerbated by the fact that the Fed will be very, very unwilling, in our view, to hurry into rate cuts. And certainly with the divided Congress, the prospect of fiscal support to restart the engines of growth, if we do have a relatively severe recession, the fiscal support isn't going to be there either. So it's a question of what is going to restart the engines if we go into a slowdown next year.
No, it was interesting. The Philadelphia Fed just did a study on the labor market, and what they found is that the seasonal adjustment is massively screwed up. And instead of creating 1.2 million jobs this year, we've only created 10,000. And this is from, the Fed. So the Fed might be having a pivot quicker, because what we do find is at times of when the economy is at pivot points, especially the employment data is incredibly delayed, and it gets massive revisions. It's a terrible indicator. It just doesn't capture. And what we did see from Challenger and Gray, that in December, layoffs are up 400% from a year earlier. That only happens when we have a pretty big recession. So I think that as we start to get new data and also revisions, I think the Fed is going to be finding that we're in a deflationary environment. We're also in a very weak labor market. That the pain has already been done. So we'll see whether they see that and slow their tightening, or whether they keep tightening into it, and we end up having a very bad recession where they actually do put millions of people out of jobs unnecessarily.
Brendan, I'd love to pull on sort of the second thread that you talked about, which was Russia's invasion of Ukraine, which obviously, beyond being a political, geopolitical, and humanitarian nightmare, also had huge impacts on global markets and on global inflation.
And global inflation, yeah. It played a huge role. Yeah.
Can you talk to us about, what did we see there? I mean, the ones top of mind for me are food and energy. What happened there? Are there any other stories we missed?
So certainly. So food, we'll start with oil. So oil prices spiked right when Russia invaded Ukraine, very logically. But most interesting, we're back below, actually, in terms of the price of oil, and more importantly, gas at the retail level. We're below where we were when Russia invaded Ukraine. Food prices have also normalized. We still do have some pockets that it's harder to get. But prices like chicken and milk have kind of normalized. That Ukraine played a role in that, but that was more supply chain issues. Where the problem for Ukraine is they're the breadbasket of the world. Wheat and grain prices have gone up. Those are still very elevated. And while they're being able to ship some out of the ports in Odessa through Turkey, it's been a little bit hit or miss. That certainly has hurt inflation in the United States and the developed markets. But where it really kills is in developing markets, especially the Middle East, who really, really massively rely on that. So, I mean, what we saw in the protests throughout the Middle East, what was that? 5-6 years ago, that was really started by food shortages.
Food prices. Mm-hmm.
But going forward, especially with the price of oil, so we now have a slowing economy, but we also have uncertain supply, especially with these new price caps on the Russian oil. So for the last, say, month or two, we've very much been trading sideways after a large correction in oil prices. And, it goes up or down depending on very much the driver lately has been China. So, when China was closed, oil prices sell off. Now China's reopening. So they went back up, and now everyone's getting COVID. So now we're worried they're going to shut down.
Yeah, I mean, the reality is, I totally agree with Brendan's view. Like in terms of energy prices, there just seems to be a floor, right? We've had significant price relief from, Brent crude has halved almost since its peaks earlier this year, and that's a meaningful relief for consumers and people around the world. But the reality is, there are a lot of things that are kind of keeping prices elevated relative to where they might be otherwise. One being, the Strategic Petroleum Reserve. The Biden White House has said that they're going to refill the SPR with prices below 80. That's kind of what we're flirting with right now, and that has a psychological, but also real price impact. If the White House is going to be doing that, would continue to do that, which I think they will. The story from the White House is, hey, we sold high and bought low, and there's something to that. It's sometimes things you get a lucky break and things bounce in your favor. But that's certainly something that puts a floor under oil, we think, at these levels. You've got OPEC still very much on the case, ready, willing, and able to cut supply.
And we should point out it's OPEC plus, right? Coordinating
OPEC plus,
with Russia.
Right. Yeah. And their big announced output cut in October was slammed by the White House's complicity with Russia's, oil blackmail, energy blackmail of the rest of the world. And and OPEC's response to that was, I know you are, but what am I? I mean, it was just like, whatever. And sort of open defiance of the White House. We don't think that that's going to change that much. And obviously Russia is going to be in a position where, weaponizing energy, they, can they really cut off total supplies? They need to fund their war effort too. But, keeping the pressure on. This is like next year, this falls into the category of, counter cyclical support. When growth collapses, one of the things that helps, or when growth comes down significantly, one of the things that helps is energy prices fall a lot, commodity prices fall a lot too. And we just think that it's going to be disproportionately high relative to the global economic.
Like if you look at global shipping rates, they've fallen off a cliff.
Back to pre-pandemic levels
price
now, right? Yeah.
Even copper's come down. So in a normal situation, just taking the shipping rates, oil would really probably be more in the $60 range, but that support is definitely there around $80. But in another weird 2022 event, apparently we're friends with Venezuela again.
Not yet Iran, though. I think we should probably pivot to some U.S. political and policy decisions. But before we do, I just want to pick up on one thread you mentioned, Brendan, is this has really been sort of a last month of 2022 story. But do you want to briefly recap, like, what has been the shift on China's policy on COVID and what are the implications for the markets that we've really seen take place this year? Yeah,
so China, it kind of blows my mind because the benefit of being a totalitarian, fairly strict government is, when you tell people what to do, they do it. So China could have developed a vaccine and just told everybody to get it, but they didn't do that for whatever reasons. What they decided to do was lock down. So there's some demonstrations, and the government did a complete about face and said, okay, fine, we'll end it, for the most part, the lockdowns, and people have been going out. But on the flip side, now the hospital is overrun and people are starting to die because they're just not very well vaccinated in China. So we'll see. So this is an interesting one, whether the government, does a 180 again, but also now the people got what they wanted, and we'll see if they now maybe start self quarantining themselves.
Okay, great. All right, we're going to take a short break, and when we come back, we'll discuss more of this year's top stories.
Penta is the world's first comprehensive stakeholder solutions firm. We are a one-stop shop for the intelligence and strategy leaders need to assess a company's reputation and make decisions that improve their positioning. As executives in the C-suite must account for a growing set of engaged stakeholders, all with distinct, fast-changing demands, Penta provides real-time intelligence and strategy solutions. We work with clients solving complex global challenges across a variety of industries. Our clients span technology, financial services, energy, healthcare, and more. To learn more about how Penta can support your company, check out our website at pentagroup.co, our Twitter at pentagrp, or find us on LinkedIn at Penta Group.
And we're back with the Macrocast. Let's get into it. Let's talk about what happened politically in the US this year. Again, I was thinking about our podcast last year, and I think we were talking about, between the first big COVID relief bill that when Biden signed when he came in, and between the infrastructure bill, that he had sort of two historic wins in his first year. And then this year, we got a third one. So what happened this year? We were talking about Build Back Better. That doesn't exist anymore. Now we're on to Inflation Reduction Act. But what did we see? What did we see happen? What did the Biden White House and the Democratic Congress finally get together and pull together this year?
Yeah, it certainly was a tale of two halves for the Biden administration. I think everyone thought it was a failed presidency, going into the summer. And John, what the heck happened?
Well, it was Senator Manchin moves in mysterious ways, and it was. There was enough wheeling and dealing. I think the Biden administration, there's obviously a learning curve in sort of dealing with with Senator Manchin. We saw some feathers getting ruffled earlier in the year when there were, the White House seemed to be making assumptions about his support and making statements that didn't seem to rub him the right way. And so it was a long and winding road. The idea of, what exactly was the motivation? Clearly he was given some of these, the elements in there and the pipeline and approvals and permitting stuff, but it's been, to a great degree kind of carved out. And so, I think that there's, the sort of uncharitable explanation is that Senator Manchin kind of got snookered by Senator Schumer. And maybe the White House, and sort of led into a position where he's less likely to get all of the bargaining chips that he thought he had cashed in. But whether that was the case, or whether he just saw an opening and realized that the cost benefit analysis of giving the White House a win on this was favorable finally for him and his political fortunes. It's really hard to tell. But when they pulled it out, it was essentially a very meaningful piece of legislation. I think Kyrsten Sinema was still sort of, when he surprisingly announced his support for it, I think Kyrsten Sinema was left exposed. Yeah. And the word was that she didn't appreciate how that whole thing went down, but yeah, she wasn't going to be the one standing in the way of it, and the Biden administration sort of snuck it out, snuck through the crack in the door that had been left open.
Yeah, and then they passed, bipartisan, meaningful, gun regulation, and then the Defense of Marriage Act. So irrelevant whether you agreed with the bills that were passed, it was a fairly historic first 2 years in terms of legislation passed by the Biden administration. And then that led into the midterms, which were supposed to be a red wave. And, the Republicans were able to take a 5-seat majority in the House, but the Democrats actually kept the Senate. So it's fairly unprecedented.
And picked up a seat, actually.
They picked up a seat.
Yeah. No, so I'm curious. So back to the IRA for a second. I think it mostly an energy bill, lots of clean energy tax and investment incentives and production incentives, a little bit of healthcare in there. But let's ask about the name just for a minute. Inflation Reduction Act. Yeah, it doesn't actually reduce inflation.
No, that was entirely a political, opportunistic thing to do. You're passing some things that could in the future. Well, especially on the medical side, it did drive down the cost of some Medicare and Medicaid purchases, but it did nothing to reduce the inflation. It just happened to be signed into law at the same point with which inflation started to come off for completely different reasons.
Yeah, a little bit of salesmanship. They wanted to say, my Republican colleagues voted against the Inflation Reduction Act. It's it really is. Not exactly what it says on the wrapper, I guess you'd say, but not. I mean, false advertising is probably a little too strong. You could make the claim that over the medium to longer term there are some disinflationary aspects of this, but it is a bit of a stretch and some political gamesmanship on the name there.
It was too good to pass up, and so I'm fairly impressed on that one.
The importance of a good narrative.
Exactly. Yeah.
So, Brendan, you mentioned the midterms. Here we are. We're at the end of Congress. Congress is still working right up until Christmas. It looks like the last thing they're going to focus on is the omnibus to fund the government through the end of the fiscal year.
Things are looking pretty good on that front. Would you agree?
Yeah, I think so. One, as everybody's joking, seems like it's the last train out of town, so lots of things being attached to it. But it looks like they'll pass it. But so we know, at least with some certainty, the government's going to be funded through the end of the summer. But what are the other potential implications from now? We're going to be going from a Democratic town to a divided Congress with a Democratic president. What should we be thinking about going into next year?
And most importantly is what is not in this omnibus, which was the debt ceiling.
The debt ceiling.
Sometime around, late spring, early summer, we're going to kind of reach that level, and we need Congress to raise the debt ceiling because this is how we do it. I'm a little concerned. Trying to lead a 5-person majority in the House is almost impossible.
Mm-hmm.
And especially. Both the parties have very large, contingents on the far right.
Yep.
So I just worry that this is going to have to be a bipartisan deal, and it's going to go right up to the end, and we could get one of those scenarios where Treasury has to stop paying bills for some people before Congress actually gets this done. So I think in terms of what the market is. The market's not focused on that now, but in terms of legislation that the market will be focused on, that's it, because I don't really expect any significant bipartisan legislation to happen, certainly in the next 6 months.
Got it.
Yeah, we're kind of thinking that maybe, there are some places where the two sides can come together. It's not impossible. That there was a sense that there could be some bipartisan accord on crypto regulations. We think that is probably a bigger challenge now, obviously. But stablecoin regulation might be something that the two sides can come together on. That's been sort of a legislative priority. Some other aspects of the coming, there's clearly bipartisan agreement on a U.S.-China posture. Maybe some, there's going to be surely like a combination of executive action, tweaking, tightening some restrictions, loosening perhaps some others.
And we've already seen it on advanced chip technology towards China, so we're thinking it's going to be even more broad. Right.
And so really about the legislative agenda. There's been a lot done on that front, but it's not impossible that you see some more, potential legislation on, whether it's, let's see, I mean, you name it, some other platforms and technologies that might come under scrutiny. But the reality is the Biden administration has a lot to execute on. And so pivoting to sort of executive action and following through on the legislation, the kind of rulemaking and under the next stage of implementation and enactment that a lot of these legislative accomplishments now have to go through. So
at a minimum, a huge amount of appointments that haven't been filled yet. So they have some catching up to do. And now that they kept the Senate, that it allows them to maybe get some of that done.
And I feel like this has sort of been the story of the last two presidencies, right? With Trump and with Obama's first presidency, it's like you had the first 2 years of unified government and then the last 2 years of split government. So much more focus on executive action and regulatory action. John, you mentioned crypto. So I was thinking the other big sort of bucket of stories we've heard this year is sort of around tech and fintech. So obviously there's a lot that's gone on in crypto. There's been the acquisition of Twitter by Elon Musk, antitrust efforts in Congress, and then just generally a rough year in the markets overall for tech stocks. Market overall a little choppy, tech stocks hard year. So got a lot of topics there. What do we want to start with?
Yeah, the question about, what is Elon Musk has a lot to say on Twitter. And one of the things he's been saying on Twitter as he's been pilloried for the recent stock price action in Tesla is, hey, look, this is all about the Fed tightening interest rates. Mm-hmm. It is it's a massive headwind on tech stocks, particularly when you have a company whose earnings are kind of way out in the future, and that then you have to apply the discounting rate and so on and so forth. So there's kind of a mechanical way of doing it. It's also, let's face it, the tech stocks have been greatly benefited by this permissive liquidity environment. Money would tend to flow to the stuff that had momentum in this kind of zero negative interest rate, free money, ample liquidity kind of environment. So it wasn't just the discounting rate; it was sort of the overall animal spirits running in the in markets and really bidding up these tech stocks. And when you look at the current valuations, how badly some of these have performed, I guess the question really is, is this kind of the froth coming off the top of the valuations? They never should have been up there at these, ridiculous Icarus-like peaks.
And that's an important point too. 2021 was ridiculous in terms of everything was up, 30 to 100%. So while they had a terrible 2022, they kind of normalized from the massive amount of money we threw into the world in the pandemic.
Yeah, and that's kind of we talked a little bit about the eye of the storm. This is kind of part and parcel of these other ambiguities in this kind of transitional period that we're in right now. The question is, okay, last year was about Fed tightening and, the froth being blown off and kind of the air coming out of the bubble. But have we reverted to a more normalized trend line that is still going up, or is this a complete sea change? Is this a paradigm shift in which we're going to go? It's more like 2001, where you end up 2001, where you end up with tech stocks like dramatically multi-year derating. Mm-hmm. And you find out real flaws in the business model, and these end up in a grinding bear market. You've got a fair amount of uncertainty around these very differentiated outcomes, and investors are obviously pretty tentative in trying to in making a bet when you have these kind of fat tails ahead of us.
One of my favorite sort of sub-threads of this story that you were just discussing is the connection back to the antitrust efforts in Congress, which now at the end of the year have fallen apart. It looked like there was sort of early momentum in the year, then it stalled out, and then a few last-minute runs at the NDAA, last-minute run at the omnibus. Yep. But one of the things they had was like defining who falls into this legislative authority with the broad antitrust efforts. And because of the decline in tech stocks this year, a lot of their prime targets actually started wobbling and then falling beneath the caps that they had defined in that legislation. So not only did the efforts on the Hill actually stall out, but even if they had moved forward, at least for where folks are now, it's not clear that they would have applied to them.
100% agree.
Well, so before we get into sort of rapid fire and try to wind things up, John, you had mentioned a little bit about crypto, but speaking of a wild ride in 2022, do you want to bring us back from where we were at the beginning of the year, where we hit the trough, and then where we are now?
Yeah, crypto had, it really had the run up along with, all the things that we were saying about tech running up. Mm-hmm. Apply very much to crypto as well. And it was very hard to, we're in a situation very much like the broader tech universe in which, is this a reversion to a, sort of more normal, a more normal kind of market where you have, relatively gradual and not parabolic upside and that sort of thing? Is this, a maturation process? all asset classes in the early, it's not uncommon to have a big shakeout and then have the industry pick themselves up and, see who's survived and carry on from there. Or is this, is the non-zero interest rate new environment just structurally hostile to this asset class? Can this asset class survive in this new paradigm if we are going to a higher, structurally higher interest rate environment, structurally, sort of tighter monetary conditions in the investable horizon, and is the asset class in really any shape to find its footing in this environment? And right now, these chapters really have yet to be written, and peering into the crystal ball in 2023, it's hard. It's hard to see through the clouds to see. There are plenty of analysts that think the Fed is going to be right back in the rate cutting business at the end of next year, and that's what Fed Fund futures are showing. So it's not like it's not like an outlier view. That is the market view, right? Is that the Fed is going to be cutting rates, perhaps relatively precipitously in the second half of next year. And
I think that is a possibility, but I don't think we're going to go back to the QE days where I don't think they'll continue to roll off the balance sheet, and that as an economic experiment is over. And I think we're going to not immediately throw money into the markets like we did for the last that's 14 years, right?
Yeah, exactly. that era, it seems to be passing into history. At least that's our expectation. And what lies ahead is a very different kind of economic dynamic. Particularly when you look at the interplay between monetary, fiscal, and the real economy.
Yeah. So I think we go back to successful companies, their stocks will do well. You can have hiccups here and there. But I think you're going to have to, prove that if you don't have current earnings, you have to show investors, a clear path to those earnings. I think within crypto, there's some very strong companies and use cases, and I think and some very weak ones. And I think we'll see that washed out in the next coming years. But I don't think that everything has to be necessarily a zero.
Okay. Well, let's do a little bit of quick fire to cover. I jotted down 3 things that I was thinking about that we haven't talked about, and then maybe we can go around and just each pick one thing that we're looking at and focusing on next year as an indicator. So feel free to add, but student debt, student loans, and loan forgiveness, will they, won't they? Turmoil in the UK, and then we talked about it a little bit, Brendan, but also supply chains, where we've been, where we are, and is friendshoring actually a thing?
Well, student loan seems like it's going to become a Supreme Court decision, isn't it? From what I'm understanding.
I think that's right. It sort of seems like and I'll admit a little bit of ignorance here is, I know some friends personally who got in time and had their debt forgiveness reprocessed. And so I'm sort of curious how this all shakes out if it does go to a Supreme Court decision with people who managed to get in under the wire.
They have to pay it back. This is like a disaster.
Yeah, for the Biden administration, is it a win-win? Essentially, if the Supreme Court says okay, then you get your policy win. If they say no, you say it's an extreme court legislating from the bench. We
need more Democratic senators.
Need more Democratic senators. So from the Biden administration perspective, I think they're not equivalent outcomes, but you can see even in a negative one, you can see the spin approach and the framing that they would do on that.
Yep. All right. What about our friends in the UK? There was a period this year where I think probably all Americans suddenly knew who the UK Prime Minister was, and then who the new UK Prime Minister was, and then who the new UK Prime Minister was.
Yeah, it was a fascinating episode. There was obviously it was very contextually driven as well. The policy recommendations in and of themselves, in a vacuum, if you looked at them, weren't like completely crazy. But it was just the fact that when they were doing it under the circumstances, with inflation really high, with the bond markets under pressure from a just almost a panicked rate hike cycle from the Bank of England and other global central banks, doing this when the pound is already like loitering at multi-decade lows and just like looking to slump further. It was very poor. It was very poor timing, and it was not it ended up being a violent reaction from financial markets, which essentially rejected the bond vigilantes were seen again in the UK. They've been missing in action in the US and a lot of other parts of the world, but with the just enormous volatility that rippled through the gilts market, they had to back down, and now they have an austerity program. They have less in terms of fiscal support than they would have ex ante had they not done that. And there's just a lot of uncertainty. The central bank is hiking rates, but they're going to be in a stagflationary environment. Europe and the UK have as tough a monetary outlook as you can possibly imagine.
Mm-hmm.
And the UK, and the UK and Europe now have Southern Europe now have that like kind of bond market twitchiness that is associated with, when you have doubts about fiscal sustainability and debt loads, and the central bank isn't necessarily as credible as it could be on the subject. It's a very challenging spot.
Adam Posen, who's a global central banker, did a piece a couple of days ago where he said that basically 80% of the inflation that's happening in the UK is entirely self-imposed because of Brexit.
I was gonna ask. It seems like we're still playing out the story of Brexit.
There are chapters
Northern Ireland border.
Yeah,
there are chapters left to be written in that, but that's a good segue into my sort of off, out of the mainstream focus for next year, looking very closely at peripheral bonds, and as a secondary sort of European financial institutions. The European Central Bank is going to be, has said that they're going to be stepping away from the bond buying program in spring of next year. That's going to be basically, that's going to be like a bomb defusing crew, right? I mean, it's like these delicate maneuvers where you're trying to step away from the market without Italian bonds blowing sky high. And it's a really delicate and nail biting process. So obviously watching that and the health of European financial institutions, because the bond market stability and the health of structural footing of those institutions go hand in hand.
Brendan, what about yourself? What are you watching for next year?
I'm going to be watching emerging markets, which actually have been holding up, much better than anyone would ever predicted over the, from the beginning of the pandemic till now. And I think a lot of it is, you still have some bad actors, but they've been through a lot in the last 30 years, and a lot of central banks, the central bank activities of 2022. I think you can say that the emerging market central bankers were way ahead of the curve, especially on inflation, and did a much better job of managing their economies than the developed markets. The dollar has somewhat come off its highs recently, so. I think there is an opportunity for maybe some outperformance in emerging markets, whereas the developed markets will be slowing. And this is emerging markets ex China.
Yep, absolutely. Well, I'll tell you what's really gotten my attention is the role of climate in trade, and is protection of domestic markets and climate goals going to end up going hand in hand and throwing up barriers to trade, particularly between developed economies. We've seen some of this with domestic production requirements in the IRA with the US and the tensions that's created with the EU. But even before the IRA, the EU had already announced their own carbon border adjustment. And what does that mean for the US? So very keen to keep an eye on that next year and what happens there.
That's a great idea.
Well, do you guys have any last words before we wrap things up and hopefully have a peaceful rest of 2022?
Well, where's Tony?
The as a return guest. Hopefully we can bring him on as a return guest in 2023. No shortage of exciting topics. Looking forward to getting a little R&R over the holidays and jump right back into it in the new year. Thanks to the crew, the Penta content team, and all the great work that you guys do over there to produce this show. It's tremendous, and we've been now going for how many years is this now? We've got a pretty long streak, and we've just gotten some great support over all along the way.
Absolutely. Well, thank you everyone for listening to the Macrocast. I'm Stratton Kirton with Penta, and thanks to John Fagan and Brendan Walsh for hosting with me. We're off next week, but in January, we'll be back with new episodes. Happy holidays and a fantastic new year.
Thank you for listening to the Macrocast. Please remember to subscribe, rate, and share.